Gas just jumped 80 cents per gallon in 3 weeks, and it is only going to get worse. If you think this is temporary, you need to watch the next 60 seconds, because what I'm about to tell you will change how you budget for the rest of this year. This is not a normal price spike. This is not seasonal variation. This is not corporate greed. This is the biggest oil supply disruption in human history. The Strait of Hormuz, the waterway that carries 20% of the world's oil, has been effectively shut down by Iran. Oil prices have exploded from $70 per barrel to over $100. Gas has gone from $2.93 per gallon to $3.72 in just 3 weeks, and every expert is saying the same thing. It is going to get worse before it gets better. By the end of this video, you will understand exactly why gas prices are exploding, how high they could go, what it means for your budget, and what you can do to protect yourself financially. Subscribe immediately because this is affecting your wallet right now, and you need to understand why. Let me start with the numbers because they are shocking. 3 weeks ago, on February 27th, the day before the Iran war started, the national average for gas was $2.93 per gallon. That is pretty normal. Not cheap, but not expensive. A lot of people barely noticed. Then February 28th, the US and Israel launch massive airstrikes on Iran. Iran retaliates by closing the Strait of Hormuz to oil tankers, and gas prices start climbing. By March 1st, $3. By March 5th, $3.20. By March 10th, $3.50. By March 15th, $3.70. Today, March 17th, $3.72 per gallon. That is an 80-cent increase. 80 cents in 21 days. Comment below what you paid for gas the last time you filled up your tank. To put that in perspective, an 80-cent increase in 3 weeks is a 27% jump. The last time gas prices rose that fast in such a short time was August 2005 during Hurricane Katrina. But Katrina was a temporary event. The hurricane hit, oil production in the Gulf of Mexico shut down, gas spiked for a few weeks, and then came back down as production restarted. This is different. This is a war with no end date. This could last weeks, months, or even longer. And unlike a hurricane, this is not going to just blow over. Share this with anyone who does not understand why their commute just got $20 more expensive per week. But gas is only part of the story. Diesel is even worse. Diesel prices have risen from $3.65 per gallon to $4.99. That is a $1.34 increase. Diesel is now basically $5 per gallon. And diesel matters way more than most people realize. Every semi-truck on the highway runs on diesel. The truck that delivered food to your grocery store, diesel. The truck that brought packages to the Amazon warehouse, diesel. Construction equipment, diesel. Farm tractors, diesel. Trains, most of them run on diesel-electric hybrid systems. When diesel prices double, the cost of moving every product in the economy goes up, and those costs get passed on to you. Type diesel if you are realizing this is going to make everything more expensive, not just gas. Let me explain what is causing this because you need to understand the mechanics. Oil is a global commodity. The price is set by global supply and demand. Before the war, the world was producing about 100 million barrels of oil per day and consuming about 100 million barrels per day. Supply and demand were balanced. The price was stable around $70 per barrel. Then Iran shut down the Strait of Hormuz. 21 million barrels per day of oil that normally flow through that strait are now stuck. Some tankers are rerouting around Africa, which adds 2 weeks and huge costs to the journey. Most tankers are just anchored outside the strait waiting for it to reopen. Either way, 21 million barrels per day are not reaching the market. Subscribe if you want to understand economics, not just hear talking points. So now, global oil supply has dropped from 100 million barrels per day to about 80 million. But demand has not dropped. People still need to drive to work. Factories still need to run. Planes still need to fly. So you have 80 million barrels of supply trying to meet 100 million barrels of demand. That is a 20 million barrel per day shortage. When you have a shortage, prices skyrocket. Basic economics, and that is exactly what happened. Oil went from $70 to $120 in the first week of the war. It has since dropped to around $103 because over 30 countries released oil from emergency reserves. But it is still way above where it was. Hit that like button if you remember learning about supply and demand in school and are seeing it play out in real time. Now let me tell you how oil prices translate to gas prices, because a lot of people do not understand this. Crude oil is the raw material. It gets refined into gasoline, diesel, jet fuel, and other products. The cost of crude oil is about 50 to 60% of the price you pay at the pump. The rest is refining costs, transportation, taxes, and the gas station's profit margin. So when crude oil goes up by $30 per barrel like it just did, gas prices go up by about 70 to 90 cents per gallon. That is roughly what we are seeing. Oil up 45%, gas up 27%. The math checks out. Comment below if you think gas stations are also using this as an excuse to raise prices even more than they should. But here's the scary part. Oil analysts are saying if the Strait of Hormuz stays closed for another month, oil could hit $150 per barrel or higher. Some extreme predictions say $200. Let me translate that to gas prices for you. Every $10 increase in oil prices adds about 20 to 25 cents to the price of gas. If oil hits $150, that is $50 higher than today. That means gas could go up another $1.25. So we are looking at potential gas prices of $5 per gallon nationwide. In expensive states like California, $6 or $7. That is not fear-mongering. That is just math based on if the strait stays closed. Share this video with anyone who needs to start budgeting for $5 gas. Let me break down what this means for your personal budget, because numbers at the pump do not tell the whole story. The average American drives about 12,000 miles per year. The average fuel efficiency is about 25 miles per gallon. So that is 480 gallons of gas per year. At $2.93 per gallon, your annual gas bill was about $1,406. At $3.72 per gallon, it is now $1,786. That is an extra $380 per year just from this 3-week price increase. If gas hits $5, you are looking at $2,400 per year. That is an extra $1,000 compared to 3 weeks ago for a single car. Type ouch if that math just hurt your wallet. If you have a family with 2 cars, double those numbers. An extra $2,000 per year just for gas. That is money that is not going into savings, not going toward paying off debt, not going toward your kids' college fund, just gone, burned up in your gas tank because of a war happening thousands of miles away. And there is nothing you can do about it except drive less or buy a more fuel-efficient car. But most people cannot just go buy a new car, so you are stuck paying more. Subscribe if you are feeling the squeeze and want strategies to deal with it. Now let me talk about the second-order effects, because gas prices are just the beginning. When diesel hits $5 per gallon, trucking companies have to raise their rates. A typical semi-truck gets about 6 miles per gallon. A long-haul truck might drive 100,000 miles per year. That is 16,666 gallons of diesel. At $3.65 per gallon, that was $60,800 in fuel costs. At $5 per gallon, that is $83,330. An extra $22,500 per truck per year. Trucking companies are not going to eat that cost. They pass it on to their customers. And their customers are the companies that make the products you buy. Comment below if you have already noticed groceries getting more expensive in the past 2 weeks. Grocery stores get deliveries by truck. When trucking costs go up, grocery prices go up. Walmart, Target, Kroger, Safeway, all of them are paying more for diesel. They raise prices to cover it. A study from 2022 found that a $1 increase in diesel prices leads to about a 3% increase in grocery prices within a month. Diesel just went up $1.34. That means grocery prices could go up 4% just from diesel costs. Add that to the existing inflation we already have, and you are looking at significant increases in your food bill. Hit that subscribe button if you are tired of everything getting more expensive. Construction is another area that gets hit hard. Every piece of heavy equipment on a construction site runs on diesel. Excavators, bulldozers, cranes, dump trucks, cement mixers. When diesel prices double, construction costs go way up. New homes get more expensive to build. Roads cost more to repair. Infrastructure projects go over budget. And who pays for that? You do. Through higher home prices if you are buying. Through higher taxes if it is government construction. Through higher rents if you are renting because landlords pass on their increased costs. Share this if you think inflation is about to get way worse because of oil prices. Airfare is also going up. Jet fuel is basically refined kerosene, which comes from crude oil. When crude prices double, jet fuel prices double. Airlines are already adding fuel surcharges to tickets. A flight that cost $300 a month ago might cost $400 now. And it will keep going up if oil stays expensive. Business travel gets more expensive. Family vacations get more expensive. Even if you are not driving, you are still paying for high oil prices every time you fly. Type flying if you have a trip planned and are worried about ticket prices. Let me tell you what the government is doing about this and why it is not working. President Trump announced on March 10th that the U.S. will release 172 million barrels of oil from the Strategic Petroleum Reserve. The SPR is an emergency stockpile of oil kept in underground salt caverns in Louisiana and Texas. It exists for exactly this kind of crisis, so releasing oil from it makes sense. But there are 2 problems. First, 172 million barrels sounds like a lot, but the world consumes 100 million barrels per day. So the SPR release is less than 2 days of global consumption. It helps a little, but it is not enough to make up for the 21 million barrels per day stuck in the Persian Gulf. Comment below if you think the Strategic Petroleum Reserve is being used correctly, or if we should save it for something worse. Second problem, the SPR has limits. The US had about 364 million barrels in the SPR before this release. After releasing 172, we will have about 192 million left. That is the lowest level since 1984. And if this war drags on, Trump might have to release more. At some point, the SPR runs empty, and then we have no emergency cushion at all. That is dangerous. What if there is another crisis on top of this one? What if Saudi Arabia gets attacked? What if Russia cuts off more oil? We need some reserves left for future emergencies. Subscribe if you think we are using up our emergency supplies too fast. Other countries are doing the same thing. The International Energy Agency, which represents the world's largest oil-consuming countries, coordinated a release of 400 million barrels total. Japan, South Korea, European countries, all of them are tapping reserves, and again, it helps a little. Oil prices dropped from 120 to 103 after the releases were announced, but prices are still way higher than before the war, and the releases are a one-time thing. You can only drain reserves once. After that, there is nothing left to release. The only real solution is reopening the Strait of Hormuz, and that requires ending the war. Hit that like button if you think politicians are just putting a band-aid on a bullet wound. Trump is also trying to increase oil production. He approved a new BP offshore drilling project in the Gulf of Mexico on March 15th. He is pushing U.S. oil companies to drill more. He is cutting environmental regulations to speed up approvals, and the U.S. is already the world's largest oil producer at about 13 million barrels per day. But there is a limit to how fast production can increase. You cannot just drill a new well overnight. It takes months to plan, permit, drill, and bring a new well online. So increased production will not help this crisis. It might help 6 months from now, but not today. Share this with anyone who thinks drill baby drill is the solution to this crisis. Trump also announced on March 14th that the U.S. will temporarily allow countries to buy Russian oil that is already at sea. This is huge. Since 2022, the U.S. has had sanctions on Russian oil to punish Russia for invading Ukraine. The sanctions restrict how much Russian oil can be sold and at what price. But with the Strait of Hormuz closed, the world is desperate for oil from anywhere. So Trump is giving a 1-month exemption. Russian oil that was loaded onto ships before March 14th can be sold without violating sanctions. This brings maybe another 1 million barrels per day to the market. Again, it helps, but it is not enough to replace 21 million. Type Russia. If you think it is ironic that we are now depending on Russian oil to solve a crisis, let me tell you what is coming next, and you need to prepare for this. There are 3 scenarios. Best case, the Iran war ends in the next 2 weeks. The Strait of Hormuz reopens. Oil tankers start moving again. Supply comes back online. Oil prices drop back to $70 or $80. Gas prices drop back to $3.20 or $3.30. Not as low as before the war, but way better than now. This is possible, but requires both the US and Iran to agree to a ceasefire very quickly. Based on current rhetoric from both sides, this seems unlikely. Comment below if you think best case scenario has any chance of happening. Middle case, the war continues for another month or 2. The strait stays closed. Oil prices hover between $100 and $120 per barrel. Gas stays between $3.70 and $4.20 per gallon. Diesel stays near $5. The global economy slows down but does not crash. This is the most likely scenario based on current trends. Neither side is winning decisively. Neither side is ready to negotiate. So it just grinds on, and we all pay higher prices for months. Subscribe if you think middle case is where we are headed and you want updates on how to deal with it. Worst case, the war escalates. Trump follows through on his threat to bomb Iran's oil infrastructure on Karg Island. Iran retaliates by attacking oil facilities across the entire Gulf region. Saudi Arabia, UAE, Kuwait, all of them get hit. Oil production across the region collapses. We are not talking about 21 million barrels per day disrupted anymore. We are talking about 40 to 50 million barrels per day offline. That is half of global oil production. Oil prices spike to $200 per barrel or higher. Gas hits $8, $9, $10 per gallon. Diesel hits 12 to 15. The global economy crashes. Stock markets collapse. We enter a depression. Hit that notification bell because if worst case starts happening, you need to know immediately. I am not trying to scare you. I am trying to prepare you. Worst case is unlikely, but it is possible. And even if we avoid worst case, middle case is still really painful. Gas at $4 per gallon for months is going to hurt family budgets badly. So what can you do about it? Let me give you practical advice. First, reduce your driving if possible. Carpool to work. Combine errands into one trip instead of multiple. Work from home if your job allows it. Every gallon you do not burn is money saved. If you were driving 500 miles per week and you cut that to 400, you save 4 gallons per week. At $4 per gallon, that is $16 per week, or about $832 per year. Share this video with coworkers and organize a carpool if you can. Second, if you are in the market for a car, prioritize fuel efficiency. A car that gets 35 miles per gallon instead of 25 saves you a huge amount of money. Using the same 12,000 miles per year example, 35 mpg uses 343 gallons per year. 25 mpg uses 480, that is a difference of 137 gallons. At $4 per gallon, that is $548 saved every year. Over 5 years, that is $2,740. That could be the difference between affording a slightly more expensive fuel-efficient car or not. Type hybrid if you are thinking about getting a more fuel-efficient car because of this. Third, budget for higher prices on everything, not just gas. Groceries, shipping costs, airfare, anything that involves transportation is going up. Look at your monthly budget and add 10 to 15% to categories like food and household goods. Cut spending in discretionary areas if you can. Entertainment, dining out, subscriptions you do not really need. This is temporary. When the war ends and oil prices normalize, you can go back to normal spending. But for the next few months, tighten up. Comment below what you are cutting from your budget to deal with higher costs. Fourth, if you have investments, be careful. High oil prices are bad for the stock market. Companies have higher costs. Consumers spend less on discretionary items because they are spending more on gas. Economic growth slows. Stocks tend to drop. If you are young and have decades until retirement, do not panic sell. Ride it out. Markets always recover eventually, but if you are close to retirement, talk to a financial advisor about reducing risk temporarily. This might not be the time to have 100% of your retirement savings in stocks. Subscribe if you want financial advice that is practical and realistic. Fifth, consider energy alternatives if you can afford it. Solar panels for your home reduce electricity costs, which might go up as oil prices rise. An electric car eliminates gas costs entirely. A bike for short trips saves gas and is good for your health. I know not everyone can afford solar panels or a Tesla, but if you are in a position where you can invest in alternatives, now might be the time. Because if oil prices stay high for years, those investments pay off faster. Hit that like button if you have been thinking about solar or an EV, and this crisis is pushing you to actually do it. Let me give you the bottom line. Gas prices are up 80 cents in 3 weeks, and this is just the beginning. If the war continues, we could see $5 gas nationwide. Diesel is already at $5. Everything that depends on transportation is getting more expensive. Your budget is about to get squeezed hard. The government is trying to help by releasing emergency reserves, but it is not enough. The only real solution is ending the war and reopening the Strait of Hormuz. Until that happens, prices will stay high or go higher. Prepare accordingly. If this video helped you understand what is happening and how to protect yourself, share it with everyone you know, because they need this information too.